Pop up a message. There we go. We're going to be recording this morning's session. So want to say good morning and welcome. My name is Lori Moon and I am with the Innovative Manufacturers Center. And IMC has been partnering with KIZ Resources for several years to put on this webinar. In the last 2 or 3, we've also been partnering with Drive. We have Amanda Craig Bradley on the call as well, or Zoom. So just real quick, kickoff. IMC is a state industrial resource center. We work with manufacturing companies in central Pennsylvania. KIZ Resources has been our resource for tax credits, particularly for the Williamsport Lake Cumming Keystone Innovation Zone, which we manage in Lake Cumming County. Amanda's group at Drive has the Greater Susquehanna Keystone Innovation Zone as well. But a lot of folks, because the KIZ has particular zones within the state, a lot of folks also are interested in all the Pennsylvania tax credits. So we're going to touch on all of those today. So again, welcome. And Lindsay with KIZ Resources, I'm going to turn it over to you if you'd like to do a brief intro and then get us rolling.
Great. Well, thank you so much, Lori, for hosting, and Amanda from Drive for hosting and getting the word out. We've got a good group of people today. So please, as we're going through everything, ask questions. If you have a question during a particular program, go ahead and ask during that program. We don't have to wait till the end for questions. You can use the chat. If you're comfortable enough to unmute yourself, feel free to do, or if you are comfortable enough to unmute yourself, feel free to do that to ask a question as we go along the way. We are gonna probably be done in less than the 2 hours allotted. We had expected Sarah Spisak from DCED to be available for the call to go over specifically the Keystone Innovation Zone program and some that they're looking to have this current fiscal year that's occurring. But unfortunately, she was not able to join. Something came up with them at the office. So you just get me today. But we're going to go through a lot of programs very quickly. Our company, again, KIZ Resources, and we also have Deb Byrne from MVM Associates. We are, companies in the state that are available and here to help you kind of navigate and manage these tax credit programs. We're not accountants. We don't do tax work, but we understand the tax laws and the tax components of these credits and who to reach out to, whether it's DCED or the State Conservation Commission or the Department of Revenue. So we want to try to be a resource for you guys for all of these various incentives programs. The state is constantly looking at ways they can incentivize certain types of industries, certain activities that are important to the state to make make Pennsylvania, thrive and be a viable place for businesses to start. There's going to be some more workforce development things as well. So as we get into that here, this is kind of our alphabet soup of programs we're going to go over today. This is not an all-inclusive list of the various acronyms the state has available. But the goal today is to kind of give you a good overview of the various programs so that you can understand, based on your industry and your experience, or maybe what you're going to be doing for expansion, that there might be a program out there available for you that you're able to utilize and grow from and benefit from. So you probably aren't going to remember all of these letters here, but we're going to hopefully give you a good idea of what to expect. So the first component before we get into the various programs is to kind of go over some things that encompass all of the programs. And before I get into this, because I'm going to talk, this will be a little bit accounting language throughout sometimes. So if you are an accountant, if you're a CPA, our presentation today is worth a CPE credit. If you would like to get that certificate, please contact us after. If you have Tori's contact information already, who sent out the webinar, Zoom, or Lori, reach out to either of them or to Amanda from Drive, and we'll make sure you get your certificate. We just need your name and email address. So a PA tax credit. What is a tax credit? It is not just a tax deduction, so it's very different. A tax deduction is something that you can take that lowers your overall taxable income, and then you pay tax on whatever that, your adjusted gross net income is. A tax credit is dollar for dollar against your PA or your federal tax liability if it's a federal tax credit. So it's against actual taxes that are due. So it's very valuable. It really lowers your tax bill if you are paying tax. It also allows companies to float through to their ownership if the corporate level does not have taxes due. And then in Pennsylvania, they created a transferability component. So you can actually sell your tax credit and get cash out of it. So we're going to go through all of those types of scenarios here. The first thing for a tax credit that you receive, so if you participate in any of these programs, you receive a tax credit, the first thing the state wants you to do is use it on your corporate liability. So if you even owe $100 only on your PA RCT 101, the corporate tax income, they want you to use that credit first before you would try to sell any portion at all or pass it through or do anything else. So that's the first thing that has to happen. The year you receive a credit, you have to use it first. The second option that some companies like to do is to pass it through to the owners of their company. So if you are you're an individual, you are an owner of an LLC, a pass through, or an S corp, or if you're a sole proprietor on you're filing a Schedule C, you can actually pass the credit through from the EIN level of your company into your personal level. There's a few specific rules that have to happen with that. In order for it to go through the best way, you need to fill out the PA claim form properly and send it into the state to a very specific email. You don't just send it into anybody. You don't just include it with your tax return. You send it in ahead of filing your tax return. And the state would prefer you to file that within 30 days or 60 days of filing your tax return. That way they can process it in the office that handles tax credits, and it's where it's supposed to be for when the individual tax people go to process your return. They can match up and find the credit and get it issued for you. The tax credits can only be passed through one level. So if you have a company and it's an LLC that's owned by another LLC who then has the individual users at the end, it only can go down one level. So if that second entity does not have PA tax liability, you'll need to actually go through a sale transaction or a transfer with the state to get the credit to the end user of the individual. The pass-throughs have to be done based on ownership percentage. So they have to be equally done. If it's 50-50 partner, 33 and a third % partners, you need to have everything passed through equally each year based off of the owner percentage. So that also means that you need to make sure that all of those owners, if there's multiples, can use that portion of the credit. There's no carry forward for these tax credits at the personal level. The credits only have a carry forward. Each program has their own carry forward amount of years, but it's only at the corporate level that they carry forward. So you only pass through exactly what you need to use in any particular year. And then for most programs, if you are married, you must file an individual tax return for your PA state tax in order to utilize the credit for most of the programs. So you just file married filing separately from your spouse. For your PA, it doesn't affect anything with your federal, and then you can claim the credit. So there's very specific rules to use a credit. The state sometimes messes it up. So we are here to kind of help you through that process and make sure that if you get notices that the proper paperwork's filled out to make that happen. What a lot of companies do instead then is actually sell these tax credits for cash. So what we're talking about here is real dollars that can come into the company. There's buyers identified at the beginning of the process. The state doesn't match up buyers and sellers. They're purchasing those credits at a discount. the selling entity of a tax credit must be tax compliant. So you can't owe anything to the state in order to sell a tax credit. And then the process takes about 60 to 90 days for the state to complete. So they're going to go in, they're going to do that tax compliance check. They're going to manually move the credits from the taxpayer's account into the purchaser's account of the tax credits. And then that's when, you know, the transaction's closed and you can receive cash from the buyer. And those funds, although they're unrestricted, they are taxable as taxable income. So they are typically taxed as like a capital gain. You had sold an asset that you had in your company to another taxpayer, and that net cash amount that you're receiving there is taxable. So that's just some general things about tax credits. In order to receive any of these tax credits at all, you do have to be tax compliant. Not just you as the company, but also any owners of the company that have at least, 20% or more ownership interest in the company do have to be completely tax compliant. So you want to make sure if you have any owners that are, out of state, that they're filing their non-resident returns, that they're watching their mail to make sure that they, receive any notices from the state during when you're applying for these credits, because if they don't respond to them in time to correct something, you could lose out on, $100,000 or lose out on a tax credit. Okay, so we're going to go ahead and get right into the programs here. The first program we're going to talk about is the Keystone Innovation Zone program, the KIZ program. This was the first one that we had kind of gotten started with back in 2006 when we started our company. And it has really grown and expanded as far as the number of companies participating in the program since then. Unfortunately, the amount of tax credits had gone down several years ago now, before it had really exploded. And now we definitely think it's going to be time for them to look to make some adjustments to this program again. But the reason this program was created, it was actually established back in 2003, 2004, during Governor Rendell's administration. And what they were finding is that our state has really great colleges and universities, and they're putting out entrepreneurs, they're putting out great employees and innovative thinkers. And then those students, when they graduate, are leaving the state. So they wanted to establish a program to kind of help stop the brain drain. They wanted to create these economic ecosystems around the colleges and universities. So they partnered with economic development agencies like the IMC and Drive for each specific area to kind of get these targeted geographic zones available to foster innovation, create those entrepreneurial opportunities, and really just grow the small business community. They found that companies, startups, do better when they're working in some sort of office space where they have that kind of support and the opportunity, because they're collaborating with other young entrepreneurs. Maybe they're dealing with the same issues. You can share services, share ideas, and create more opportunities for the communities. The biggest benefit, besides having that great ecosystem and a great place to start your business, is the tax credit itself. So the KIZ tax credit is something that's equal up to $100,000 per year, and it's based off of gross revenue growth. So it does not matter if the company is profitable yet. It is your gross top of the line sales number. It can also include grants from any source as eligible sources of income. It can include if you won, Ben Franklin was doing a business plan competition and you get a $10,000 cash award, and you're, as long as it gets on the tax return, that can be included as part of your gross revenue. The only things that don't count would be, things like real estate type rent collected, things that are not derived from IP of your business. So you have to, if you do have multiple sources of revenue, you do just have to kind of spell out what's what for the state. But it's 50% of that increase year over year. So you have to have 2 years in the zone to start qualifying and generating the tax credits. And they look at the tax returns to help run through that calculation. And we're going to go through an example here in a little bit. There are currently $15 million available in tax credits per calendar year. There used to be 25 million. So that's why I'm saying, I think as the state is looking to revitalize, and the new Secretary of DCED is very interested in supporting the tech community, and they are looking at this program and how they might look to expand it in some ways, or, offer it to for other zones to start again. There's lots of things being discussed, but we would seek to maybe see that number from 15 go up to 20 or 25 million again. So how do you qualify as a KIZ company? There are 4 basic components to be eligible for the program. The first is the business has to be in operation for less than 8 years, and that 8-year window starts from your EIN incorporation date. So it does not matter if you created your EIN, waited 3 years, and then actually started business operations. It goes back to that EIN start date as your start year. The second component is you have to be physically located within the boundaries of a KIZ zone. So that doesn't mean you just have a post office box number that you collect your mail from every 2 weeks or once a month or something. You have to actually have physical operations, people showing up, rent space, a dedicated desk in a co-working space where you're taking meetings or going into work, and actually have real operations within the boundaries of the zone. There are 28 zones throughout the state. 2 of them represented here, but there's also zones in Harrisburg, in State College, Altoona, Bedford, that's the I-99 corridor, Erie, Northwest PA. There's throughout the state, and I'll show you the website link that DCED has if you want to see if there's a zone in the county that you reside in, and then you reach out to that local coordinator. The third component is that you have to be operating within a targeted industry. There's 4 basic industries. They're very broad. We're going to go over that on the next screen. And then the fourth component, and this is kind of the key thing that separates whether you're a KIZ company or not, is that your business has to have some sort of intellectual property. So you've done some innovative component, you've created something, developed something that is new and unique to your industry, to your process, your secret sauce per se, that sets you as a KIZ company. It doesn't mean you have to have a patent, although that's good support. But if you have something that's copyrighted, something that you're licensing, those are the types of things. You just can't be, like a wholesaler or a retailer of off-the-shelf software that you're not doing anything, adaptive to those components. So as I said, there's 28 zones throughout the state. Each zone coordinator, which sits at an economic development agency that oversees that zone, they are the ones that are in charge of maintaining their own maps in the specific designation components. So if you go to DCED's website, they have a map of Pennsylvania. You can click on the county that you want to see who that coordinator is there, and then you would contact them directly, or go to their website to see where the zone maps are. For the industries, you can see them listed there. The first is advanced or diversified manufacturing. So that's pretty self-explanatory. It can really be any type of manufacturing, whether it's food processing. We've had brewers qualify, plastics, metals, all kinds of, manufacturing components, niche manufacturers that can qualify there. Second is business services, which is more on like the IT kind of side or tech company kind of side. So it's not just attorneys and accountants who are practicing, but it's people that are doing support services for businesses a lot of the time, creating apps or web development components, creating different systems and processes to be used across various industries. All of those kind of development type companies in kind of the IT field that are supporting business services. The third component there is life or biosciences. Again, that's pretty self-explanatory if you're in that field. And then the last one is high technology. So that's looking at like the energy sector, nanotech, defense contracting kind of things, those all kind of qualify under high technology. And the way that the coordinators work with you is when you want to be added to a KIZ zone, you work with your local coordinator to establish your let them know your NICS code, a brief description of what your company is doing, what is that IP that you have, what is it that you've developed or created, where you're located, your EIN start date, and those are the things the coordinators are gonna collect. So the other things to be able to stay in the zone, then you have to have, again, that property in the zone. So that's like your rent space. You can have space in multiple locations. Maybe you have some space in the zone, some space out of the zone, and then you just have to divide who's working where when you go through the calculation for the tax credit. You should have payroll. If you don't have payroll right off from the onset as a sole proprietor or something, that's a goal that you would have and something that's used during the calculation if you have those multiple locations where you have some payroll in the zone and some payroll outside of the zone. And then the other component is that KIZ companies have to complete these semi-annual reports. It used to be a Salesforce application called KIZ Force. They've recently updated it to Executive Pulse is the new provider of this system. So these reports, they're due every January and every July. And what they look at are like a 6-month snapshot of what's been happening in your company. What was your sales numbers? What kind of R&D were you doing? What were your payroll numbers? Did you add any employees, especially ones that were recent PA college grads that you could, that you kept in our state? And are you taking outside investment? Those types of things. Very high level. It doesn't have to be down to the penny. Just answer those questions as accurately as you can. It should only take you about 15 minutes to do them. It is so much easier if you see those reminders come through. One will come directly from Executive Pulse from the state. One will come from your coordinator, and they will ask, you to log in and complete that. It should only take you about 15 minutes. So please do that. If you have missed any, you can work with your local coordinator and fill out the information on an Excel spreadsheet, and then your coordinator has to go in and input it for you into the system. Do we have any
I have a question.
Sure.
John asked, how can zones be added? They're currently not in a zone. So I can start there I can start off if you want.
Yeah.
As a coordinator, any modifications to the zone would have to be made through me. So if there is a zone near you, you would want to reach out to those folks and have a conversation with them, with that coordinator, because they'll have to put in an application to the state to modify the zone. And it is a little bit of a process, but we've done it here in Lycoming County. So it is possible, but you'd have to work through your local coordinator to have that done. Let's see, do you want to add anything? That's correct.
The only other thing is if you are, if your county does not currently have a zone, they're not currently open and accepting applications to add additional zones. That's something that we're kind of exploring now with the new administration of this program. We've had, to see if that's something that's interested. I know there are several counties that don't have a zone included as part of the KIZ program. So it is something that's being discussed, but as of now, the only way to get a zone changed is to work with a local coordinator that already has a zone and have those modifications done. And it does make sense sometimes to have those modifications. Companies age out and maybe it's a manufacturer and they're not moving and they were included in the zone, and now you can redesignate that space to another area where there's new development for businesses. If there's any other questions, please let me know. Okay, so we're going to go a little bit into the application process for the tax credits. So for KIZ purposes, you do those twice a year, not quarter, biannual reports through Executive Pulse, but those are not your tax credit application. You do have to file a separate application in order to apply for these tax credits. It is done online through DCED's single application for assistance. They call it ESA for short, electronic single app. In order to do that, you have to register online through, you have to create a Keystone login to access that system. And then that ESA is something that the state uses, DCED uses for all of their programs. So anything you're applying for through DCED, you'll use that system. Because of that, there's a lot of questions in there that don't really make sense whenever you're applying for something like a KIZ tax credit. That system encompasses things that are very project specific. So they're asking for, goals and measures and, what the need is that you're trying to fill and those types of questions that don't necessarily fit with this. So if you have questions, we do assist with that application process to kind of make it as streamlined and smooth as possible. So there's a few things that you have to have in order to apply for the tax credit. You must have 2 filed tax returns that correlate with your time spent in the zone. So you have to have been in the zone for a base year and a comparable year, and then year 3 to receive a tax credit. And you have to have those filed federal and Pennsylvania tax returns. You need to be registered with the state of Pennsylvania to do business in the state. That's another component that they do check on. And then you have to work with your local coordinator to receive their certification. So they're going to meet with you once a year in person to verify that you are physically working in the zone. They're going to collect your EIN documentation to make sure that you're, registered in PA, that you are, when your EIN start date is. They're going to ask for your NICS code for what industry you're in, and all of those things. And then they're going to generate a coordinator letter that you have to have and upload in order to access the rest of the application. The app this year, we're expecting to open around the end of September. Sarah Spisak is currently working on updating the final guidelines. There's not a lot of changes this year from last year. If anybody has applied last year, the biggest thing is because we are, they had allowed a lot of remote and hybrid work components to be included the last several years due to COVID restrictions and health safety concerns. There is going to be some more specific guidance put in there about remote workers, out of state workers, because again, we're hiring from all over the country now sometimes. So that they are going to put specific guidance onto how to account for remote workers, what kind of hybrid schedules are allowed, because they still believe that companies thrive better when they're working in an office setting than when they're just working from home solely. So they still want to get people back into the offices for this program. That's how it was designed. So the application will open around the end of September. It's going to be due December 1st. That is a hard and fast deadline. I highly recommend that you apply before Thanksgiving if you can, just because you don't want to wait till the last minute. That tends to be when a lot of people do try to go in, and it can bog down the system and make it run very slowly. And December 1st is hard and fast. If you end up, waiting too long and go in to file and it won't let you submit, and then you finally get it to submit at 12:02 a.m. and it's December 2nd, your application will be denied. It'll be thrown out. It will not be accepted. That's a hard and fast deadline. Beyond those tax returns in the coordinator letter, the state will ask for additional information. If you've sold a tax credit before, they want documentation on that, and they want to see where that's reported on the tax return, because you can't double dip and get a tax credit on a tax credit. They may ask for photo ID, for other business records or bank account statements to show some of the activity. For the KIZ program, they would only ever ask up to a certification of cost report to verify, some of your costs and expenses, as well as income, where the income's coming from. They wouldn't be full audited financial statements because the credit is capped at $100,000. But these are things the state can come out and ask for. They're trying to make sure that companies that deserve these credits are the companies that are receiving these tax credits. Again, all companies and the owners that have 20% equity have to be tax compliant. So from December 1st through April, they will reach out. They'll be reviewing those applications. They will reach out to you and make sure that you have all of those components, your tax components completed. So they'll look at quarterly reports for employer withholding, for sales tax returns, as well as annual filed returns. So you want to make sure that all of those things are up to date with the Department of Revenue in order to generate and receive a tax credit. You don't want, a $50 balance to stop you from getting a $100,000 tax credit. The award letters then get mailed out on May 1st. That is the date that they have to have all the approvals, all of the review done. So even though that approval letter is going to be received in May, this year's application, May of 2024, it is backdated with an effective date of December 15th, 2023. And that way the company can use it against their 2023 tax return. And as soon as that 23 tax return is filed, they could sell it if they are looking to sell and monetize those credits. That does complicate things a little bit if you are a C Corp and you and you have a little PA liability and you need to use the credit. You'll either need to file an extension because the tax due date, of course, is April 15th, and you're not receiving your letter until after May 1st. So if you file an extension, and then the credit will cover your PA tax liability, or if you have filed early, you will most likely need to either amend the return or if you have PA liability, and claim that credit. Now, if you don't have any PA liability, if you're not passing it through at all, for sure, you can go ahead and file on time as normal. So once you receive those tax credit allocations, you can sell the credit in the following year. These credits do have a 5-year carry forward, so you can carry them forward, see if you're going to use them, and then decide to sell them, anytime down the road, or sell a portion of them. It doesn't have to be all or nothing. The only other component that we're going to go over, and this goes with all tax credit programs, is that once you've received a PA tax credit, you must file a new report 45 days after you file that tax return. So if you received a tax credit in 2022, when you file your 2022 tax return, whether you claimed the credit or not, they want you to go on to the Department of Revenue's website, and we can provide this isn't a clickable link, but we'll make sure you guys all have access to that report page through Department of Revenue. You have to go on and report what was the credit you received. Did you use any of it? Did you sell any of it, which you wouldn't have yet if you just received it and just filed your tax return? So just what you used of it, and answer all of the questions on that report. The following year, then in 2023, when you file your 2023 tax return, let's say you did sell your 2022 tax credit during the 2023 tax year, you would file again in 2023 saying, yes, we received another credit in 2023. This was the amount. We didn't use any. The 2022 credit we sold in 2023. This is all the details of the sale transaction. These are what we are using the funds for. And again, those funds are unrestricted. You can use them for purchase equipment, payroll expenses, prepaying rent, whatever you need in your business, paying down debt, various things. So there are reporting guidelines. These are all things, all of these types of reports, whether it's the biannual report or whether it's this fiscal report after you've utilized or sold a tax credit. These are to help the Independent Fiscal Office, who does reviews every few years, 3 or 4 years, the KIZ program gets reviewed, is to help them to monitor and know that these tax credit programs are doing what they're supposed to do. They're incentivizing what they're supposed to do. Employees are being added. And that's what gets support from the legislators to continue to grow and improve these various tax credit programs. Are there any other questions before I get into a short little example here? I'm not going to spend a ton of time going through this.
No, there aren't.
Okay, great. So in general, the timeline for a KIZ company is you're going to have a base year with some time spent in the zone. You begin your reporting, you meet with your coordinator. Then you're going to have a year 2 revenue year where you're growing your business, continuing to complete that KIZ force reporting. And then finally, in the 3rd year of being in the zone is when you actually apply for that single application for assistance for the tax credit. Again, the deadline's there. And then year 4 is when you can finally monetize and get some cash out of it. The next page, and you guys will get copies of these slides and of this power of the presentation here. It kind of takes you through an example so you can kind of see some real dollars of what a company could earn as they grow. Your first year does not have to be a full calendar year. You can move in any portion of that year or start your business any portion of the year. In this example, we had them start the company in December of 2017. So they are, brand new, not generating any revenue yet. They get approved and put into the zone. 2018, they've generated $200,000 in revenue, 300, and then grew again in 2019. 2020, they had a dip of their sales number. It went down from 2019. And then in 2021, they were able to bounce back and match that 2019 number. So that's kind of what happened in the business side. And then what that translates to in tax credits is, $225,000 total dollars in tax credits. So extra, income into the company that you are utilizing in different, year over year as the program moves forward. So there was one year where you had that decrease between 2020 and 2019. So you didn't get to apply for a tax credit in 2021. That's okay. That happens sometimes where you have a dip in revenue and then the company just moves forward and you apply in the following year and start the program over. So the maximum amount of credits that companies can generate would be 6 tax credits. It's for companies 8 years in business, max. If you continue to grow in some way, grow your gross revenue year over year, you can have a maximum of up to 6 tax credits. And they can range anywhere from, $1,000, couple $1,000 to the $100,000 mark. Any other questions on the KIZ program?
Hold on here. We had a comment. Our company was sold to new ownership and a new EIN was established in 2018. All operations and equipment were the same, was sold to the new EIN. Would we qualify with the new EIN?
That's a really great question. So the state does allow for spinoffs, but it has to be something new and unique. So an established company, if you just changed ownership and nothing else changed as far as the IP and technology, that wouldn't be able to restart the clock just by creating a new EIN because of new ownership. But if if the company was, the prior company was established in 2015, you could still have a year or 2 of eligibility, but it would go back to that original start date of the first EIN if nothing changed. Now, if you have a manufacturing company or an IT company or something, and you create and develop something new that's different than your core line of business, and you're going to spin that technology into a new company and start a new EIN, and it will have its own separate customers, and things actually did change as far as the IP, and your old company is still going to continue doing what it has always done, then that would be allowed. That would be able to start over an EIN. Anything else? Okay. So the next program we're going to go into, which kind of goes hand in hand with the KIZ because you have to have that IP component. So a lot of KIZ companies are also doing research and development, but it is also available for any company in Pennsylvania that's creating and developing, whether you're within a targeted zone or not. So there's no zone specific components. It just has to be done in Pennsylvania. R&D is a huge program. There's both federal and Pennsylvania components that we're going to talk about, but it is really beneficial and definitely available for various industries, manufacturing, IT, all of those, like life and biosciences, of course. It's all of those things, of course, whenever you're creating and developing something new and never before seen in the world, but it's also all of those incremental improvements, the product or those process improvements that you're doing to make your product better, faster, stronger, cut costs. We're always, looking and developing and creating different ways to do things differently to cut costs. So all of that time spent to that's new to your company that you're spending time and dollars on can potentially count as R&D. So there's a few items for it to actually qualify. So you can say, well, yeah, I'm improving things, or I have an R&D project. So these are the components that you have to go through to check if it's qualifying to receive an R&D tax credit. So the first component is that you have to be at financial risk. So if you are receiving, a DoD grant and they are covering all of your costs, so you're getting everything reimbursed, all of your expenses, there's no success or failure component to that, and you are, you're covered, you're not at financial risk, nothing's coming out of your pocket, you cannot also generate and receive an R&D tax credit. However, if you're operating on a fixed price contract and at the onset of the project, you're at risk, you'll have to put your money into it if you need to spend more than what you thought you did when you priced it out. You're at financial risk to covering any additional costs. So that goes a lot of the times we see most companies operate on fixed price contracts. If you're a niche manufacturer and you bid out and say, yes, we're going to create this component that you need for you, we'll develop the mold for you to use, and this is the price it's going to be, and then you go over budget, you can't go back to your customer and say, oh, you need to pay us more. You signed a contract at a fixed price rate. So of course you hope you don't go over budget. You want to make a profit. You want to be, a profitable business. You want to keep your costs within what you expected them to be. But you are on the hook for those costs if that happens. So the fixed price contracts do allow you to be at financial risk. And it doesn't have to just count anything over and above those fixed price contracts that count towards your R&D. It can be the whole project. So then you go through what's called the 4-part test. And I divided these up into 2 different PowerPoint points instead of all 4, just because I feel like they kind of go, 2 of them, they each go hand in hand. So the first one is it has to be based on hard sciences. So, something that's an actual physical science, chemistry, physics, all of those types of things, a software-based science. It can't just be a marketing survey or something like that. It has to actually be based on a science component for your project. And then the second test is that it has to have a qualifying purpose. So you have to be doing something that is improving it in some way. So whether it's you want to cut costs, make your process more cost effective, whether you're trying to make your product stronger, so you're trying different materials, you're increasing functionability, you're making things more time efficient in your manufacturing process, or maybe in your software producing process. Those are all qualifying purposes for your project. And it's easiest to track R&D based on project specific components. So if you are working on something for one particular client, and you're trying to figure out, what that IP is that you're going to develop and create and maintain so that you can license and lease it out, that's a project. If you're working on something specific for your product, that's a project. And it's easier to just kind of track those expenses that all correlate to those projects. The third test is that you have to have uncertainty at the onset of the project. So again, that's not to say that you're not confident that you are going to get the result that you're seeking, but you'll have different paths you can take, different materials you could try, different processes that to get to your end result. You don't know exactly everything that you're going to do along the way. And then the fourth component is that you have a process of experimentation. So in this case, failure is rewarded. It proves that you're doing R&D because you tried something, you started down one path, it didn't work out, you had to take a step back and try something different. So that really supports that you're doing R&D. You should be able to describe that within your projects. There are 3 buckets of costs that qualify for R&D. The largest driver of R&D expense is the wages. So those are your employees who are actually doing the physical R&D work. If you have a key engineer or a key employee that 80% or more of their time is spent doing solely R&D for you, then you get to count 100% of their W-2 wages. The wages factor does not include any fringe benefits or things like that. It's strictly the W-2 wages. And then it also can include portions of time from any managers or people that are doing R&D on a smaller scale for you. So managers that are overseeing the R&D projects, portions of their time that they spend there can count. You can track that, whether it's through the timesheets of your employees. For a manager, maybe only 10% of their time each week is spent overseeing these R&D projects. They're attending these meetings, they're giving instruction, helping with the testing of functionality, those types of things. And then the rest of their time is running the business and all the other ways that managers and owners of small businesses need to do. The second bucket of costs are direct supplies. We see that most in manufacturing because it's those supplies that are getting used up as you're working on the tooling to create the new mold or the new product. So it's supplies that are used through the process, don't have value at the end. All of those are direct supplies that you're utilizing through your R&D project. It can also be some of the hosting and cloud-based kind of things that you're doing on a software side can count towards supplies. And then the third bucket of costs are subcontractors. So if you have hired a contractor, somebody on a 1099 basis, an individual or another business, as long as you're maintaining the IP of the overall R&D project, 65% of what you paid your subcontractor counts towards your R&D bucket of costs. So one of the biggest questions we get asked is, how do we track this type of R&D? How do we qualify this? How do we know what we're doing as R&D and how much to count without paying for an expensive federal study to be done? We're a small business. We only have so many employees. We feel like we can track it ourselves and self-certify it. So Rochelle from our office has created a really great checklist that kind of breaks out that 4-part test. It asks you all of those questions. Are you at financial risk first? And then the 4 parts, are you doing this as a qualified R&D project? And how do you answer those questions? And then it breaks out each of those cost categories where you can write in all of your employees down, what they're working on, what their job descriptions are, how much of their time is spent doing their R&D, what their total wages are, and then how much of that wage counts towards the R&D. Same thing with your supplies. You make your supplies list of what was used throughout those processes. And then you have those receipts and those W-2s available as backup for that. Subcontractors as well. If you've issued a 1099, of course you use that. If you haven't issued a 1099, if they only did, a little bit of work for you, you would need to provide, the name of the business, the EIN, or SSN if it's an individual. The address is very important too, because we need to know where they were working, if it was in Pennsylvania, if it was in the United States, or if they were out overseas or something. And then the description of what it was that they did for you. We do have, and there's a weird dash in the word complete there, I just noticed, sorry about that. We do have a research expense organizer available online if you'd like to utilize that, or the Excel spreadsheets and the checklist. Rochelle can provide that to you. And I am probably going to have her talk a little bit more as we get into some of the calculation components or answer some of the questions on R&D here as we get going. So there's 2 programs we want to talk about. The federal R&D tax credit is something that goes right on your tax return that you file. So it's a Form 6765. You can go back, because it's part of the tax return, you can go back and amend the prior 3 tax years and utilize those credits if it makes sense to do. But you just want to make sure you have really good documentation of, who was doing the R&D, what the projects were and everything, because amending a return and asking for a big refund from the federal government is more likely to get looked at for an audit than just filing your tax return timely and claiming the R&D tax credit. Federal program is a permanent component of the law, so it's something that we know is long-standing. You don't have to question if it's going to be available next year. In the past, they've always allowed companies to fully expense what they were claiming as R&D on their tax return as well. So this is most important, I feel, for your wages. You want to be able to deduct the employee wages that you're spending for your company to lower that taxable income. We talked about a deduction. You know, that's a huge deduction that companies take by claiming that expense. Last year, through, I believe it was part of the within the Build Back Better Act, really maybe inadvertently reversed that rule that allowed you to fully expense the R&D wages, subcontractors, and supplies, and they now require you to capitalize or amortize those expenses over 5 years. So they need to be added to the depreciation schedule instead of just expensed on the tax return over for a 5-year term. You still take the full amount on your 6765 of the expenses that you incurred, but they can't be expensed fully. They have to go on that amortization schedule. There is legislation in both the House and the Senate at the federal level looking to get rid of that and go back to how it was. However, they're not in session, and we're not anticipating that to happen for 2022. We do expect it to happen, hopefully, for the 2023 tax year. So for 2022, that's going to, have to be how it's filed. It can really change things for a company that has sales. If you're, a pre-revenue company, it won't really change anything because you're not paying tax yet anyway. But if you are in a position where you could be paying taxes, you might be paying more in tax right now, which makes claiming the credit more beneficial because you can utilize it then a little faster. Another thing that kind of changed recently, so for companies that are considered a large business, you can use the credit at your corporate level, you can pass it through to your owners, but if an owner is subject to alternative minimum tax, you can't use it against that type of tax. What they've allowed to do is that qualifying small businesses, which, Rochelle, correct me if I'm wrong, that has less than 10 million in sales within 5 years.
Yes.
If you've had, 10 million and less in sales and within that 5-year term, you're considered a qualifying small business, and you can use those credits against your employer withholding payroll taxes. So the 941s that you're filing, which is huge. Or if it's going and flowing through to the owners that are subject to AMT, you can also use it to cover that alternative minimum tax. If you don't know what AMT is, you're not subject to it. Don't worry about it. If you know what it is, you and your accountant know what it is and know that that's beneficial for you. For the federal program, all of the expenses have to be incurred within the United States. They don't want to incentivize R&D that's being done in any other country, of course. They want to keep it here in the States. So you do need to provide those addresses of where the work's being done. There are 2 credit calculations, both the traditional and the simplified method. I'm not going to go into how those are calculated. It's done on the tax return. They are based a percentage of the expenses incurred for each year, and it really correlates to the sales number as well as a base component. So for traditional, if you're a well-established company, you might have to go back a really far time, and you might not have great records of R&D expenses at that time or any expenses at that time to create a good base. So they created a simplified method to counter that and be able to just look at 3 recent years of R&D expenses. I'm going to just pause for a minute if there's any questions on that, like amortization, anything Rochelle has seen accountants doing that might make things simpler, that you want to add in to how to claim those R&D expenses. Anything I missed?
Yeah, and one thing I want to add for the federal R&D, it's a tough calculation, but approximately 6.5% of your spending would be that federal credit then.
Of that year's spending.
Of that year's spending, correct.
Right. If there aren't any other questions, I'll go ahead right into the Pennsylvania portion of the credits. So there are 2 separate applications. Federal goes right on your federal filed tax return. Pennsylvania has its own separate application process. It cannot just go right on the tax return because they don't have unlimited credits in the federal level. There's no cap to the program. So whatever you qualify for, you'll receive and be able to claim. In Pennsylvania, they're capped at $60 million this year for credits. They do set aside 15 million of that for small businesses. So the way the application works, it's very similar to how the KIZ program did. The application is open already. It is due by December 1st. Again, that's the hard and fast deadline. So you need to have your tax returns filed first. And then you need to have filled out that federal form 6765 for 2022 and be able to utilize that as your part of your application process for the PA R&D credit. So Pennsylvania is not just awarding based off of your current year expenses, but they're actually looking for increases in R&D year over year. However, the base year, it doesn't, unlike the KIZ, which constantly rolls forward, that base year, you can actually average up to the 4 prior tax years to keep that base kind of a little bit more reasonable. You don't have to always beat your best year, your last best year. So for this year's application being applied for in 2023, you're looking at the expenses incurred in 2022 and comparing those to expenses incurred in 2021, if this is your first year going after the program. You do have to have some base year. You can't just go from 0 to something. You have to have some sort of R&D spending base in order to start applying. If you've been in the program for a while, you would be comparing 2022 to the average of, 2018, 19, 20, and 21, up to those 4 tax years as your average of spending. The application this year is now on MyPath. It used to be done through eTides, so everything has been converted over to MyPath. They do require more documentation, more specifying in that 4-part test, how you did your R&D, what you discovered from it, what was your processes. They want to look at, project-based items of those things, what type of projects you were working on. And then you list all of those expenses that were incurred. They need to make sure that they incurred in Pennsylvania for the Pennsylvania tax credit. So if you have a subcontractor in Texas, unless you can physically prove that they came to Pennsylvania and performed the work here in Pennsylvania, you can't count those out-of-state expenses. The companies, so of that increase in R&D spending, the large businesses, they get the 10% tax credit. If you qualify as a small business, which for Pennsylvania purposes means you have less than $5 million in assets, you actually get to claim 20% of that increase as your R&D tax credit that you would apply for. So the small businesses get that bump. They have that 15 million set aside. So you're only competing with other small businesses for these credits. It makes it a lot better. You're not competing against, those giant pharma companies or Uber and Google and all of the ones that can dump millions of dollars into R&D at once. You're competing against other small businesses. However, the program is still oversubscribed, so they usually get probably close to $100 million in applications each year. So what they do is they equally prorate the credit across the board so that everybody gets an equal percentage share of their ask for the tax credit each year. These credits do have a carry forward of up to 15 years. They can be used against the corporate net income tax level. You have to use them there first if you have PA liability. Unless you have a KIZ credit, then use your KIZ credit and sell your R&D credit, etc. They flow through to the ownership level, same way as the other pass-throughs, or they can again be sold for cash into the company. Any other specific questions? Anything else on MyPath, Rochelle, you want to add with some of the changes for MyPath this year? I do know they allow you to upload things like the balance sheet, that kind of thing.
Yeah, prior years you would have to fax or email in the balance sheet to prove that you're a small business. This year there's an upload button that not only you can upload the balance sheet, but any notes or changes or anything that you want them to have can be uploaded. The formatting looks different. The basic questions that they ask are the same. One big question that they do ask while you're applying is if you plan on selling. And then they go through, a couple questions that they want to know about. Again, it's probably to the reporting that needs to be done once you get the tax credit. Yeah, and just more detail. They're just asking for more and more detail every time.
They really want to track and make sure that companies are doing the R&D work before they're issuing these credits. And there could be, audit processes after the application where they're asking for even more detail. They might want to see those receipts for your supplies list, or, get copies of the actual W-2s before they'll issue the credit. So it's not unheard of or unique to you. They're not picking on you if you get chosen to receive, to review and verify other things. They do that across the board each year. They ask for things from various companies, especially if it's one of your first years going into it. They might ask for that documentation.
Yeah, and what's nice is to reply to that audit, all you do is we just send in the R&D checklist that you guys already completed. If there's anything else, we can add, a little bit further detail that they require, but that R&D checklist is really nice. You already have that information. You don't have to worry about gathering it later after the fact.
All right, if there aren't any other questions on R&D, I'm going to move into some of the other programs here, and promise I'll get you out of here before another hour. The rest of these programs we're going to not go into as many details, but please ask questions as we go through them. This next one, we're going to switch gears a little bit to talk about the Neighborhood Assistance Program. This one goes towards nonprofits for the most part. There is a for-profit component that we'll get into, but it was designed through kind of the Community Services Division of DCED to help support communities and get good community services that are needed in the area for distressed areas to be able to have support and get more donors involved in particular projects. So the projects can be pretty expansive. This is a short list there, but they can encompass many other things. We do see a lot of like workforce development or training programs. Certain crime prevention things that you're doing, blight removal as well, if you're beautifying, a streetscape or landscape, if you're offering, certain services within your organization where you're bringing in people and feeding them, where you're bringing in people and offering, training or support on, how to balance their checkbook and have a budget, a household budget. Those types of are all things that would be eligible projects. So whatever, kind of needs there are in the community, if your organization is creating a program to help meet those needs, you can look to this neighborhood assistance program to try to help get you more of that funding that you need to run the project. So the way that it works for the nonprofit side is the organization who is going to be completing the project will be the one to actually complete the application process. So the application always opens in the spring of each year, and it's looking at activity that's going to be happening within the state's fiscal year. So the state's fiscal year always starts July 1st of each year. So this past round was opened in the very end of March, and it was due by June 30th for donations and then projects that were going to be done from July 1st, 2023 through June 30, 2024. With the nonprofit getting an extra 3 months then to complete the rest of the project after they've received all their funds. The nonprofit's going to complete this application seeking an allocation of credits based off of their donors that they're expecting to receive to support their project. They have to define the place, the neighborhood that they're serving, the problem, what is the need that they need to meet there, their project, what they're going to do, and then the proposed outcomes. How is it going to help the needs of the neighborhood? Is it going to, feed 10 extra families a week through the food bank? Is it going to, remove this blighted community and make it safer for the residents, or the blighted streetscape or landscaping component, and make it safer for residents, for walkability, etc. The best way to get your project funded is to have businesses actually submit a commitment letter prior to the application. In the past, they had allowed organizations to create a solicitation plan if you didn't have businesses at the time of application. They did away with that. So now you have to have the commitment letters in by the end of the application process when you submit. So what they're looking for with that is just a business to, simply write a letter to the organization that they are in support of your project, and they're looking to give up to a certain amount of money, up to $10,000 towards the program if they're successful in receiving the neighborhood assistance tax credit. You can get other letters of support as well from the community that helps the application, but really it's addressing those needs, and then getting those business commitment letters is what makes you have a strong application. If the state knows who is going to be receiving those credits, then they feel confident that they're going to make that donation within the time frame. Those donors have to be tax compliant, so they have to fill out the form to be considered tax compliant, to receive the tax credit. And then once the state allocates the credits to the organization, there's some additional steps. So the application process for next year is going to open probably, we expect, at the end of March. It'll be due by the end of June 30, 2024. And during that time, or prior to that time, it's good if you're working on getting those commitment letters from your businesses. There's a ton of banks that get asked this all the time, to donate to certain projects, and they're doing their CRA requirements as well. But so you put your application together, you submit it through DCED's electronic single application for assistance. So this is one of those project-based ones I was talking about, where you're actually answering those questions more specifically, providing what your budget is for your project, and then those support letters or letters of commitment. The state reviews these applications then from July 1st, the start of the project year. They usually issue these award letters sometime in November. They might be able to do it a little bit earlier here. I'm hoping they issue them in October this year, but we'll see kind of what happens with their review process. But if you're successful in receiving the credit, then the organizations will receive their notification with their allocation of credits. The donors will also receive a notification, and at that time they can give their actual donation. For most of the projects, it can always be a cash donation. For most of the types of programs, you can actually receive in-kind services or donate in-kind services. So if you're, a food bank and a grocery store is going to give the fair market value of their food, that counts. If you're doing a building project and, maybe the roofer is going to donate their time and you only have to pay for the materials, the fair market value of the labor costs could count, as well as it could be actual materials. You're being given a van to do rural outreach services that need to have, transportation needs met. The cost of the van could count. So they have from the award letter time through June 30th to make their actual donation. Once they make that donation, they'll submit a form directly to the state to get their tax credit issued to them directly. That's all on the donor side, and we can assist with that process and help them understand what the paperwork is that's needed. And then they receive back their tax credit. It's either going to be 55% or 75% of their donation, depending on what type of program they were supporting. The nonprofit then has through September 30th of the following year to complete their project. So that's how they're going to expend all their funds, complete and get their program up and running. These credits for the donors, they can be used, of course, to offset their liability. They can be sold after they're held for 1 year from that initial contract date. So July, everything backdates to that July 1 for next year's application. It'll be July 1, 2024 through September 30, 2025 will be the project contract period. The cap for this program is currently at 36 million, and it encompasses 5 different programs that we're going to go over a little bit more in detail. There is current legislation out there, so if this is a program that you've benefited from in the past or something you're looking to apply for, please reach out to your legislators now. The Senate is currently looking to vote on these things very, very quickly to include, a potential increase to this program within the fiscal code that they're looking at finishing up here for this year's budget. These
Lindsay,
are the
one
5.
quick question.
Sure, yeah.
Are county governments eligible for neighborhood assistance?
I believe so. I don't think it just has to be economic development agencies or anything. It's really any nonprofit. I think you have to provide your 501c3 or your organization documentation as part of it. But I believe that if like the county had a specific project they wanted to go after, I believe you would be able to, but I will double check that, and whoever asked that question, I will double check that and get back to them specifically. Or to the group, we can provide that answer to the group. There are 5 components to this under this umbrella of neighborhood assistance. Each one is a little bit more specialized. The regular program, just a neighborhood assistance, is any organization doing a project. 55% of the donation is the tax credit that's received, and it's just for a 1-year project. If you can have your organization qualify under what's called special program priorities, that bumps the tax credit allocation from 55 to 75%. So those are specific initiatives the state has deemed are above and beyond needed in the community. So it could be economic or disaster, natural disaster recovery type things, different diversity initiatives, veteran initiatives, serious blight elimination. There's some things for rural communities that are underserved, various types of programs that they adapt and develop each year that they are seeking. So if you qualify under one of those components, and most organizations are trying to get their projects to fit under one of these special program priorities, then that does make it more attractive for the donors. The third level there, the neighborhood partnership program, that is looking at long-term projects. So you're committing to doing a 5+ year strategic plan for the community, where you're working with the businesses, the organizations within the community, and maybe there's a whole block of the community that needs major housing redevelopment, and you're going to partner with a business who's going to give you at least $50,000 each year for 5 years to go in and strategically take over these homes or provide grants for these homes to get fixed, or whatever the case may be. So it's a 5+ year plan. You'll get 75% tax credit as the donor. The donations do have to be at least $50,000 each year, and you have to commit for all of those 5 years. If it goes beyond 5 years, years 6, 7, 8, those would be an 80% tax credit for continuing that work. The fourth component is the charitable food program. So that's specifically designed for food banks or anybody that is doing programs to help relieve, hunger, or, work on food deserts to provide opportunities, those types of things. And again, that's a 55% tax credit. And then the last component is the enterprise zone, which it switches to for-profits here. The for-profit component we can go into, or is there any other questions on the nonprofits items before I get into the enterprise zone for-profit component?
Yeah, it says, is the NAP tax credit in addition to a basic nonprofit contribution write-off?
So it is to a degree. So if you are participating in a nonprofit that qualified for an NAP project, and say you're getting that 75% tax credit back for Pennsylvania, you can still take 25% of your donation as your federal deduction. So you're still getting a portion of the federal deduction. You just can't take the whole amount. So if you gave a $10,000 donation and you got a 75% tax credit back, $7,500, That's going to cover your PA tax liability, could be sold if you didn't have that much PA tax liability. And then the additional $2,500 that wasn't covered by a tax credit is still a deduction for federal purposes. So the last component of this is for for-profit organizations. So the enterprise zones were established in specific geographic areas, again, throughout the state. So these zones do expire. So like every, I don't know if it's 5 or 6 years or so, the organizations who oversee the zones have to either reapply for their designation. They do allow other areas and communities to apply for designation on occasion through DCED. So you have to have a specific designation. Williamsport did have one. I believe it is still, I'm not 100% sure if it's still active. It's the city had run this Williamsport zone. There's one in Bucks County, there's one in Pittsburgh, one in Blair County, and one in Beaver that I'm aware of, Erie. There's several throughout the state. So if you are within a designated enterprise zone, or it could be, maybe it's a Main Street or an Elm Street program or Keystone Communities designation, you can also qualify for these credits. And you are working on a building project, whether it's new construction or a rehab project, and that project is going to in some way have some job creation components, you could potentially qualify for this credit. It's extremely competitive. That's why we're really hoping for that increase in funding amount. Last year, they had $54 million in applications across all 5 of these programs, and they only had $36 million to give out. So a lot of companies were not successful in getting an allocation. So the enterprise zone for the for-profits, you could be, if you're a manufacturer and you're in the zone, you could be doing an expansion project and you're renovating your building and adding a new manufacturing line. You could be a developer who is, renovating space and making it mixed use, retail or office space on the first level, rental units above for housing. It could be, some sort of workforce housing type project where you're creating, short-term stays or various types of housing or mixed use buildings. There's various things that can qualify for the that you're using the building space for. What the tax credits are go against is 25% of your qualified expenditures that are going towards all of the building components, all of the renovations or the new construction. So that includes any of the rehab, so HVAC, plumbing, electrical, fire safety components, the walls, the roof, all of the hard fixed things into the building. Those are all inclusive, as well as some of the landscaping, infrastructure kind of things if you need to add parking or, right of way from the main street, as well as some of the soft costs like your engineering, architectural fees, any sort of design permitting fees, insurances, all of those types of things. Acquisition can also count. However, to be successful with this program, you need to show that you have site control, so some sort of agreement in place for them to be comfortable that you will be able to complete this project in that 15-month time frame. So it goes off of the state's fiscal year again. So it's all of those expenses that are being incurred between July 1st of each year, and then you have that 15-month period through the following September. So next application cycle will open again in March, be due by June 30th. It will look at July 1st, 2024 spending through September 30, 2025 spending, and they want you to have that project done within that time frame and all of your funds done. The 25% is capped at a $500,000 tax credit. So up to a $2 million or more project maxes out what you can apply for. In the past, because it has been so competitive, they have sometimes prorated that down. So if you've asked for 500,000, maybe you get 250, so they can support some more projects within the region. These areas are there typically, underserved distressed communities with, low income populations that they're trying to provide family sustaining wages, wage positions for them. So those are the things that you can include that is going to happen within your building to make your application more strong as well. There are sometimes they do allow for extensions. They don't like to provide extensions for this because they want projects that are done within that year, because if they picked your project and then you have to go on extension, they feel like, we should have picked a different project for this year because you could have came in again in a new round. So that is something that is allowed within the legislation to have an extension up to 1 year, but they prefer you to get it done, within that first 15 months. Are there any questions on the EZP? If you have a project and you're not sure if it's in a zone, please reach out and we can check for you and get you in touch with the local coordinator. There's a coordinator for each of the designated zones for those types of projects as well. The next program then kind of goes hand in hand with that is another building project related program. These are historic tax credits. There are both federal historic tax credits and Pennsylvania ones. All of the projects that are qualifying within historic have to follow the Secretary of Interior standards for historic rehabilitation. Those are all of the guidelines that say, you can't destroy a historical feature and add in a modern component. So if there is a beautiful wooden staircase, you can't rip it out and wall in drywall in the staircase and just have a regular staircase up. Window easements have to match what it would have been. You can't just use vinyl windows and that kind of thing. To qualify, the building that you're renovating has to be located and be considered a contributing building to a historic district, or it can be listed individually on the National Registry for Historic Places. So that's your part one of getting qualified for a historic project, is proving that you are a truly historic building, whether it's contributing to that district. Part two then is telling them everything that you're going to do to your building. It's all of the things that are going to be your qualifying costs. You're going to take all of these wide shot pictures from all angles of each of the rooms and of the building, the outside of the building and inside of the building, to show the current state, and then detail in your part two what you're going to do to it. Only the renovations can be included within the original wall space of the building. Not saying that you can't expand some of the square footage, but it has to be within the four original walls. Anything that would be an addition would be considered new construction and is not eligible. Acquisition is also something that's not eligible, and things outside of the building, like the landscaping, parking components, those are not eligible costs for historic renovation. The federal program is, again, it's uncapped. You get 20% of what you qualify for. Your part three, which is when you do, finish your project and take all those pictures and show everything, is what, grants you then that tax credit. And it's done on the federal side on your tax return with your accountant. For Pennsylvania, it's a 25% tax credit up to a $2 million project. So that same $500,000 ask is the maximum, but Pennsylvania only has $5 million available each year for this program. So they've split the state into 5 regions, and they try to give $1 million to each region of the state. So it's not all just going to Philadelphia and Pittsburgh. They try to be able to get it to some of the rural communities as well, and areas in both Northeast and Northwest and Central PA as well. And then they do prorate it down. So if there's multiple projects that they want to support, instead of giving 2 projects $500,000, they might give 4 projects $250,000, or 5 projects $200,000 of credit, so that they can support more projects. It is completely oversubscribed, as you can imagine. The only other component to be able to qualify for historic is that you have to pass what's called the substantial rehab test. That basically just means that the renovation work that you're going to expend is going to exceed the purchase price less depreciation of the building. So you're going to do more to it than the original cost of the building. or depreciation if you've owned it for a while. These credits have a carry forward of 7 years at the state level. They can be used again, passed through, sold. The federal credits have a carry forward of 20 years, but you can't use them faster than 5 years. So you use them a little bit over 5 years, as much as you can, divide that credit out over 5 years, or you can have up to 20 years if you can't use it all in those first 5, but they're not transferable. This next program I'm not going to get into. It's not something that we do a ton of work with, but there are some, smaller local companies that could participate in either a film production or a video game production tax credit. So these are for projects that are doing on the film side. You don't have to be doing, a huge movie or a TV show. You could be doing a documentary and potentially qualify for a film credit, film production tax credit. You could be doing a commercial that's going to be viewed on a national audience, that you could also, potentially qualify for. So if you are spending significant dollars on some sort of video production, be in touch with us and we'll see if we can help you through that process. There are video game development companies that are also producing out video games across all of the platforms. So if that's something that your business is interested in or is doing already, just don't miss out on those programs there. This next program kind of switches gears to another industry as well. This is for the agriculture industry, resource enhancement and protection. This allows the landowners to earn tax credits for certain best management practices that they have to have in place anyways to help protect the natural resources. Applications are first come, first served. They opened just now in August 7th, and they're already getting very close to filling up for the year. There's $13 million allocated to the program. The farmers can get up to $250,000 over a 7-year period. Most of the projects are 50% for equipment purchases, although certain BMPs do have a 75% tax credit of their expenses. If you are not in the ag industry, but you want to support the ag industry and you could use tax credits, they do have an extra component to just being able to, apply for these tax credits directly and then sell them. And you can be involved as a buyer of a tax credit, but you could also get involved as a sponsor of a tax credit. So farmers can actually partner with a sponsor. We help match these up all the time. Somebody that's going to be listed on the application with them. And that way the farmer doesn't have to wait a whole extra year to receive the funds back for a sale of a tax credit. The sponsor is going to get the tax credit issued directly to them, and then they're going to pay the farmer whatever that agreed upon price was ahead of time. There's no cap then per production, so the sponsor can actually generate a larger credit than that 250,000. So if you have a huge manure storage facility that's going in and it's $1 million that you're expending, can't guarantee that you're going to get a $500,000 tax credit out of that, but you will get something beyond the $250,000 depending on what the state has available at that time when you apply, by adding a sponsor. These credits can be carried forward for up to 15 years. They can be passed through. This is one of the programs where you don't actually have to file separately from your spouse when you're using them. So that's another attractive thing. And they, of course, can be sold for cash, and a lot of operations and individual farmers do that. Okay, the next program kind of is also another private, business related and nonprofit partnership type program. This is for educational improvement tax credits. This is the state's largest program that they have available, and it's completely utilized. I think there's $200 million available through the 4 different types of programs that you can participate in, and it gets maxed out every year. They might be looking to increase the amount of education scholarship type programs for K through 12 to help with allowing parents to have more school choice. But basically, the spirit of the program is to allow donors, businesses, to redirect their tax dollars to a local educational organization, whether it's a private school, a pre-K program, educational improvement organizations who are doing after-school programs or before-school programs, or are coming into the schools and doing STEM and STEAM type programs. Those are all types of organizations that can qualify, as well as this Opportunity Scholarship one, which supports students in the most underperforming districts to allow them to have direct scholarship access to attend a different public school or to attend a different a private school locally. So the donors can receive up to $1.7 million in tax credits per year. So banks really love these programs. Most companies are not doing that large of a donation, but they are contributing to this. You get a 90% tax credit as long as you make a 2-year commitment to do the same donation 2 years in a row. Everybody does that. Nobody wants the 75% tax credit. So you always make that 2-year commitment. So to apply as the donor, you have to have a business entity that applies, and then it can flow through to the owners. There's no carry forward for these credits, and there's no sellability. So we just do a lot of education on this to get the word out about it. However, if you are an individual, maybe you're just an employee of a business, but you have PA tax liability and you want to support a local private school that is important to you, you can actually get involved and donate through a special purpose entity. And we work with an organization called the Central Pennsylvania Scholarship Fund, and that's their website there, pennsylvaniaeitc.org. They are one of the larger organizations in the state that does this, although there are many and a lot of community organizations and foundations that have components to this. But the CPSF organization, they have taken over and are actually supporting and running a lot of these special purpose entities for school districts in every single county. They don't take any fees out of these donations, so the school gets the 100% of the donation that they're expecting to receive. The way an individual participates is you sign a joinder with that SPE that states you want to give X amount of dollars to this school. And then once you make that donation through, you send your check to the SPE. The SPE sends it to the school, and then you get your tax credit in the form of as part of your K-1 from that entity. They do require a minimum of at least a $3,500 donation to participate. So a 90% tax credit of that, you want to make sure you have at least that in PA tax liability for the year to utilize it. And then you can still take a federal deduction with this EITC program for the donation that's going to the school or to the educational improvement organization. As an organization, if you want to get involved in this, you do need to apply in the fall here. Usually October, November is when the organizations are applying to the state to be eligible and be put on the list as a qualified organization to receive the funds. So you do that through DCED with whatever your programming is for the year, and then you get listed on the 2024 list of eligible organizations. The donors have to apply for their allocation of credits on May 15th if this is their second year allocation, if they, from their 2-year commitment. If it's a first year commitment, then you apply July 1st. Those credits get eaten up in those days. If you're applying and receiving these tax credits through that SPE, that special purpose entity, you don't have to worry about that application process. The SPE takes care of that for you, and then you just sign the joinder and commit that way. If you want your tax credit to be eligible for 2023, you do need to make your donation in 2023. So you need to send the check in time to be qualified. The SPEs, you can still join those now through November. There's still some space. If you are looking to donate, if you want your tax credit in 2024, you can still join the SPE now and just not pay your check until after January or after into 2024, and then it would be a 2024 tax credit. any questions? We're about ready to wrap up here. I'm just going to talk a little bit about some HR related components, more employer related tax credit programs that are available federally. And then we'll kind of wrap up with if there's any other questions. So this next program, the Work Opportunity Tax Credit, is a federal program. Oh, did I see a question coming in?
Lindsay, before you move on to that, we did have a question just come in. Can you explain the federal benefit from the EITC?
Yes. So it's my understanding, unlike with the neighborhood assistance where you're receiving that tax credit and you can only take the portion that wasn't covered by the tax credit as your federal deduction, with the EITC program, it's my understanding you can actually take 100% of your donation because you're still donating it to a qualified organization as part of your federal deduction. So it's not a tax credit at the federal level, but it is still a charitable deduction. So work opportunity. So all of you employers out there, as you're hiring people and going through that process, which is becoming more difficult and more difficult, right? To hire right now. There are some programs out there to help give you some dollars back for your investment in employees in workforce development. The Work Opportunity Tax Credit is one of those. It's something that is very time sensitive though. So as you're hiring somebody, we really recommend that you put them in, that you get them as part of their new hire paperwork, the first form for this program where they can fill out and indicate if they qualify under a certain targeted group that benefits from this program. So what it does is it allows the employer $2,400 up to $9,600 of a tax credit, a federal tax credit to be used against federal tax liability, federal corporate tax liability, if you're hiring people within these targeted groups. So it could be qualified veterans, it could be long-term unemployed, somebody that is benefiting from, SNAP or WIC programs, could be ex-felons. There are a various different targeted groups that they are trying to help support get back into the workforce. So as you're hiring them, you figure out if they qualify, and then there's additional paperwork depending on which program they qualify for. It is time sensitive. So within 28 days of hiring, you need to have all of the paperwork completed and out to the state, or you apply through the CareerLink, PA CareerLink, but then that gets forwarded on to at the federal level from CareerLink. But you apply online through PA CareerLink now. The credits can be used against the corporate tax liability, can flow through to the owner's personal liability. The employee does have to maintain their employment for 9 months in order for the company to claim the tax credit. So you must keep them on for 9 months to actually generate the credit. And then nonprofits can also do this. So if you as a nonprofit are hiring, you still want to fill out the same type of new hire packet paperwork because it can be used against your Social Security tax that's owed as a nonprofit. So any tax exempt organizations can still participate in the program. There are other hiring benefit programs. Like if you are hiring people from HUD zones, there's programs specifically for that. There's workforce development programs through like WEDNet. And there's the state is looking to provide some additional workforce development programs. So we're keeping our eyes and ears open for those types of things as well, to really help with, some apprenticeship programs and getting dollars out to help support various industries who need employees who are going through employee shortages. Another quick program that was created during COVID was the ERC, the retention credit for maintaining your employees during some of the shutdowns and continuing to pay your employees. So if you had, revenue decreases in 2020 and in 2021, and you were subject to, some of those shutdown orders, you could qualify for a tax credit directly against your 941, so your employer withholding taxes. It's actually no longer a tax credit. It's completely refundable. So it's not something that carries forward and then you don't pay your next quarterly report. They're actually going to send you a check from it. You have to amend the quarterly report within 3 years of the quarter. So Q2 of 2022 is no longer eligible. Q3 of 2022 is very close to no longer being eligible. You need to amend by the end of September in order to be able to claim and receive a refund for that quarter. If this is not something you've looked at yet with your accountant, or maybe you did and you're still unsure if you might qualify for, please reach out to us. We're happy to kind of go through the rules of the program, how you are eligible or not eligible, and kind of look through that with you. We still get constant calls from, organizations who are specializing in this, and I'm sure you all are as well. But we really try to take a very conservative and strong approach to making sure that you're not asking for a refund back of something that you're not due. It does take a long time to get those refunds. It's taking like 6 to 9 months for the IRS to get those checks out, but they are actually adding in interest for the delay, which is great. So it can be very beneficial. I also just wanted to mention, as we're talking about hiring, we have been asked often by our startup companies that we work with for these incentives, how do they go about hiring their first employee? What kinds of things do they need for hiring services? So if that's something that you struggle with, please reach out to us. We can help you create handbooks and policies as you're setting up, for new employees. We can help you with those various tax credit type programs that are out there for hiring people and helping you complete that paperwork in time, as well as, even with writing job descriptions and searching for employees, or if you need to go through, firing somebody and you're not sure how to go about that process, there's certain things that Tori from our office can help you through as you're going through those types of things. Okay, so we've come full circle to the end of the program here. Now, we went over a lot of things. That's not inclusive of everything the state offers. So really the purpose of the program today was to, highlight, of course, the KIZ and the R&D and some of those nonprofit programs, but also to let you know that no matter what industry you're in, there's probably something out there to help incentivize a project you might have going on. So if you're a brewer, you're purchasing equipment, there's a malt beverage tax credit out there for you. If you're a manufacturer, you're probably doing R&D, yes, but if you're going through a big expansion and you're going to grow your payroll in the next year by $1 million, there's an additional manufacturing tax credit for growing your payroll. There's waterfront development credits for nonprofits who are doing, a project along a waterfront. Various things. So the whole purpose of this is to just kind of keep an open mind as you're going through and growing your business. Our company does assist with the application processes as well as the sale of these tax credits to try to help maximize the dollars you're receiving, but also utilize your time best so that you don't have to research every single thing about each program. We operate on success-based fees, so we're not going to take you down a path to apply for a tax credit that you don't qualify for. We want to, and that's how MVM works as well. They want to make sure that you're going after credits that you're eligible for, that you're following the guidelines, and doing a great job of getting you those credits and getting them monetized for you timely. So I did come in under 2 hours. Not by much though. If there are any questions, you can again type in the chat. Feel free to unmute yourself if you have something specific, or if you need to follow up with us afterwards to go over something specific or unique to your company, please let us know.
Well, there weren't any other questions in the chat, but again, unmute yourself if you'd like to ask them live. But otherwise, thank you so much, Lindsay, for all of this information. I know not all of it's relevant to everyone on the call, but hopefully you found at least a piece of something that you found that maybe would be of interest or beneficial to you or your organization. So again, thank you for joining us, and we'll make sure we get the recording and the slides out to you afterwards.
Awesome.
Otherwise, thank you, and we'll see you next time.
Yes, thank you all so much.